Hi, welcome to Why with AR, and I am Aishwarya Ramnath. Why with AR explores the internal reasons behind a founder's choice, their fears, their identity drivers, and the perspectives of life, and the emotional logic that sits right beneath their strategies. This is not about how they build or what they build. This is mostly about why they build, why they persist, and why they decide the way they do. Today, we have a guest who is someone who's moved from solving engineering problems to solving one of the most toughest, difficult problems in the trading industry and built an entire ecosystem around it. He's the founder of Intraday Expert, The Clever Turtle, and also the creator of Track to Profits, an analytical platform that is integrated with Zerodha. Welcome to Why with AR.
Thank you so much.
So, your journey is very interesting, right? You're an engineer turned trader, and now you're a founder. Why that leap for you?
For me, when I got into engineering, it was, all about fascination. So initially, once I topped my 10th standard,
Okay.
my mom, surprised me with a trip to Dubai.
Okay.
And then I said, I was, amazed by the architecture and everything. And I said, okay, I'm going to become a civil engineer. So my uncle, Mr. Vishwanath, I met him and he was asking me, what are you planning for the future?
Okay.
And I said, civil engineering. And then he was like, why civil engineering? And then I said I was very fascinated by architecture in Dubai and I wanted to, build, amazing buildings.
Okay.
And then he's like, maybe that's not the right approach. And then he sat me down and actually helped me understand that, the lifestyle is what you need to choose first and then your profession. So he asked me to speak to a couple of people who are already in that field, civil engineering as contractors in the real estate field. And then after I spoke to a couple of people, I decided never in my life I'm going to do civil engineering.
You understood reality?
Reality, yes.
Okay.
And then he also told me some of the other interesting things that I could do. And he also exposed me to, internships in electronic companies and all of that. And he was like, yeah, I always loved automobiles.
Okay.
And I loved electronics. So I was always fascinated by them as well. So that made more sense. So that's how I started engineering.
Okay.
And then down the lane during engineering, we even built, electric car from scratch.
Okay.
And we participated in an event called Shell Eco Marathon that happens in 3 parts of the world.
Okay.
And we participated in the Asian event in Singapore.
Okay.
So, that kind of hands-on experience on building something from scratch, which involved electronics and whatever I had studied, made me into an engineer, and I joined Bosch for, as a hardware designer.
What did you build? What did you?
We built a complete electric car.
Okay.
So the competition was which car is going to be highly efficient.
Okay.
Right. So there are 2 levels to it, and we passed the first level and we won an award as well.
Nice.
Yeah. So that's something that really excited me about the next part of my journey, that is becoming an engineer in a corporate MNC.
Okay.
So the first interview that I cracked was Bosch, and they gave me a job of hardware design engineer. So nothing like it, because the job was to design inverters for electric cars. So I was pretty fascinated about it, before joining. And once I joined, I saw that, it's not the hands-on work that you expect. There's a lot of documentation. Of course, there were, lab experiments and all of that, testing and all of that. But it did not give me the same kind of exposure that I expected from building a car on our own, right?
You're not getting your hands dirty.
Yes.
Okay.
And then that's when I realized like this kind of a 9 to 5 situation is not going to work for me. And then I started, looking into other things. What are the other things that I could do? And fortunate for me, my colleagues had actually pushed me into, start investing, put a little bit of money into stocks and all of that. So I had no clue what it is, because I've not even heard of the word stock market until that age.
Okay.
Right. So even though my dad is a jeweler, we always saw MCX on TV, but I did not know what it is. So this is the first time I got exposure into the stock market. And then, eventually it was not just about investing. I saw that the prices are moving every single day, and probably I tried, once or twice trying to buy and sell within the same day.
Okay.
And that actually happened.
Okay.
I mean, like, I did not go to YouTube. I was
Experimenting.
I was experimenting, right?
Yeah.
And then I was like, okay, we can buy and sell the same day. So then, for some reason, I don't have a habit of, if I find something, I don't instantly go to Google and try to learn about it or something
You
like
learn
that.
it the hard way.
I learn it the hard way. Right? I want to experiment it on my own and all of that.
Yeah.
So I started doing it, and the first few trades, just like any beginner, I made a lot of profits.
Okay.
And then not a minimum capital, but still it was continuous profit. So I said,
Right.
okay, I know this game, and I put in a
You had
lot
the
of money.
beginner's luck as well.
Beginner's luck, yes.
Okay.
Unfortunately, beginner's luck is not really lucky. So in the first 1.5 year, I almost lost my 1 year worth of savings. So that's when it hit me hard that, okay, I should approach it in, a more professional way, learn about it. So then I started learning about it. And the first best thing that happened to me was Varsity by Zerodha.
Okay.
So it is by Mr. Karthik Rangappa of Zerodha, where he has curated a complete stock market education curriculum, right? So at that point of time, they used to, release one series at once, and every time they released a new series, I was done with, studying all of it and trying to implement whatever I had learned. So even then, it was not very successful, right? So then, more practice and practice and practice, I started making profits. So then eventually it happened in such a way that, in 2021, around with the 30 lakhs capital, we were able to make like 11 lakhs. I was able to make around 11 lakhs in a 3 months time frame.
Wow. Let's pause there, because in this generation, I think when everybody is starting off their business, right, the first thing people think about is how my logo should look, where should my office be, all of the aesthetic that actually comes later on. But you started with none of that. So today, if somebody who's watching is starting on their own, what is your suggestion? Like, a lot of people are in 9 to 5, they want to get out, have their own businesses, but it doesn't work the same way for everybody, right? So what is that one thing that you want them to understand from your journey?
Understand how money moves.
Right.
Okay. So nobody is going to give you money if your logo is the best in the world. Nobody is going to give you money if the name of your company is amazing. Why are people going to give you money? People are going to give you money only when you are giving them something more valuable than the money for exchange.
Right. Correct. Build value first.
Build value first. So what value can you offer? Identify that. And like my favorite mentor says, Alex Hermosi, he says always build flow and then add friction. So many people hesitate to, initially offer their services for free, initially offer their services, because when you're just starting out, even you don't know if you're offering the best or not.
Right.
Just by saying I'm offering the best thing doesn't mean it.
Yeah.
Right? So when you do it for free, there are multiple advantages. First thing, you will know whether what you're doing is working or not. Second thing, if it actually works, then you can ask that person for a testimonial in exchange.
Right.
And then build your credibility from there. So when you have like a wall full of, reviews that is telling you that you're doing the right thing, then you start charging.
Yeah.
More often than not, you don't have to do it too many times. When I started off, I gave it free education, like few sessions. Okay. And then I took testimonials once they started getting results. And then I used that on Instagram to build myself up from there. Right. So that's the easiest way to get started.
You're into risk management as well, right? You also mentor people. You have mentored a lot of individual people, and you also mentored a lot of other founders to how to handle their money. And I've also seen that the smartest people are not really great with their money. And if you observe that, could you give me an example of why that happens with the smartest people in the room?
I wouldn't say really the smartest people. Recently, I've started reading this book called Thinking in Systems. Okay, and I think I'll answer in that perspective.
Okay.
More often than not, it's the system that's the problem that is creating the outcomes. Right. So, especially in India, until now, at least, we did not have any kind of financial education. So, you are looking at the smartest people, but people who are not smart also are struggling with the same problem. People who are smart also are struggling with the same problem.
Yeah.
Right? So, because they're not trained, they're not aware. And since childhood, what have you been taught? You've been taught to save money and you've been taught to earn more.
Right.
And to earn more, you've been taught to, do this job, get this degree, get, all of those things.
Yeah.
The typical things that parents say, because that's what they knew. So when they were in their primes, so doing a job was the best thing to do.
Right.
There was IT boom, getting into a government job. Nowadays, do you see anybody talking about you should get into a government job?
No.
Right? So there's a transition that's happening.
Yes.
So similarly, even in finances, there's a transition that's happening now. Schools have started introducing financial knowledge.
Right.
So as the system changes, I think eventually the people in the country are also going to change. But more often than not, now people are only focused on earning money, and once they earn it, they don't know what to do.
What is your first go-to question to understand when somebody comes to Pranav and they're like, Pranav, I have so and so and I'm really interested in investing. What's my next step? How do you generally train them or understand their purpose of investing?
I start with why. Because if you don't know why, you have come here for a reason.
Right.
Maybe you have not thought about it. You have maybe whatever, you saw me on LinkedIn, you saw me on YouTube, whatever reason, you approached me for some reason.
Yes.
And you know it. So I start there.
Right.
Why do you want to invest?
And do you think they actually have that answer with them?
Most people do, but it lacks a little bit of realism, to be honest. For example, when I was doing consultations for my trading, people used to come to me where they're earning 4 lakhs a month, 3 lakhs is going into EMIs, and then the remaining 1 lakh 50,000 is going into household expenses. They're left with 50,000. They're like, I can put in 50,000 every month and I can trade.
Okay.
And I want to become a millionaire in so and so time. So then my next question would be, why would you want to become a millionaire? Or what does that mean to you?
Yeah.
And then they say, I want to be financially free. I again ask, what do you mean by financially free? What does that mean to you in your life? Then they say, I must be able to buy whatever the hell I want without being able to think about it.
I don't want to look at the price tag.
I don't want to look at the price tag. So this is a very, very common answer that I've got from thousands of people, right? So then I put some sense into them saying that, okay, this is not how it works. Let's put some realistic numbers to what you want in life and then make a plan towards it. You might need a yacht or you need a plane. See, you can get anything in life, but you can't get everything in life. Okay, so we need to put a plan, and there's stages to this. So then we start with the emergency funds, the insurance for protection, then comes mutual funds, and then you have like a solid portfolio of all these things. Then we can think of trading and real estate and all of that, right? So that's how it goes.
Right, I think this is why I also understand you've mixed psychology into your frameworks, right? And I think that also came with a lot of experience of you consulting 2,000 plus clients on calls, understanding their lifestyle, their purpose. So how do you integrate psychology and why do you think that's important?
So integrating psychology, I think is the main goal of whatever I do, whether it is with trading or whether it is with investing. Just today morning, I wrote a post on, direct mutual funds versus regular mutual funds. For the benefit of the viewers, a direct mutual fund is where, you're doing it on your own. It's basically DIY. Whereas a regular mutual fund is where there's an advisor involved and this person is going to guide you. Now, most of the finfluencers, one of the most famous ones also, they say that, oh, you should put in direct mutual funds and you have to save, that 1% in commissions, and that's going to add up to a lot of money over the long period, correct? 20 years.
Right.
Here's the catch. There was, uncomfortable data that was released, wherein only 19% of people who invest in direct mutual funds even stay in the markets for more than 5 years.
Right.
Whereas compounding happens actually after 5 to 7 years. So where are you actually saving money? And on the other hand, if you don't have the right kind of psychological understanding of the markets, then whenever there's a market crash, you're going to cash out.
Right.
You're going to stop your SIPs. You're not going to invest continuously. So in these cases, what is happening? You're actually losing out on a lot of money.
Right.
Because you're not buying at cheaper prices. What will happen? See, in today's generation, if gold falls, would you buy it?
Yeah.
You will buy it, right?
Yeah.
Because you know that one day it's going to go up.
Right.
Then why are you treating mutual funds differently? Right? So that's the simple question people have to ask themselves. So when they do that, we are psychologically helping them to stay invested even during downturns. So to do this, we continuously educate them through posts, through experiences, through podcasts like these of why staying invested is important. But at the same time, let's say your goal is 1 year away.
Right.
Okay, and you have probably reached 90% of your goal in terms of money. Now at this point, you should also know that it's time to start pushing your equity funds into your debt funds. You know, where it is not related to the markets anymore. Because in the 1 year, you can't see significant growth. But safety is more important at that point of time. Right. So then we start doing something called as STP to move it into debt funds. And when the goal is reached, we help them cash out. Right. So these strategies is what I said when I say integrating psychology along with the investing methodology.
But do you think dealing with different personalities and people with different background, income style is difficult for you? And how do you deal with such people? What does your mindset shift between customers to customer? And does that happen to you?
Honestly, like after having like 2,300 consultation calls in my life, so it has become natural to me to identify the pattern of their thinking after having a 5-minute conversation. So after which I know like what things I have to tell so that they understand what I'm saying. More often than not, I speak in their own industry's terms and give them a lot of analogies so that they understand it better. And more often than not, it works. So depending on the client and depending on the situation, I kind of help them really understand that.
You need to have a lot of patience when you're trading, right? A lot of people who come to you want instant money, want instant profits sometimes, and they don't sit through bad decisions, bad phases sometimes. And you as a trader, you've gone through a lot of experiments yourself alone, way before you even started a company. How did you hold yourself through that bad decision for you to even come so far?
Holding to the bad decision was extremely difficult, honestly. It is not easier for anybody.
Right.
Because it is scientific that you feel pain more effectively than you feel pleasure.
Yeah.
Okay. So in the stock markets, profit is a pleasure equivalent and loss is a pain equivalent.
Yeah.
So every time the loss is small or big, your pain is always greater.
Yeah.
Right. So that is when the why always comes in. So you will remember that 4% hike.
Yeah.
You will remember that I am not here to forgive my freedom and you want to come out and do something on your own. So that is what helps me stick through. And that is why I think even this podcast makes a lot of sense because you want to understand founders why.
Yes.
And that is what helped me stay in my course. And like Simon Sinek says, like Simon Sinek or Elon Musk, again, I'm not sure, but it's whenever you start a company or whenever you start anything, it is just a vehicle for your goal.
Right.
So if you face something significantly bad, your partner, cheated you and your company went bust, whatever happened, don't feel like your life is gone. It's just one of the vehicles towards your goal that went off. Start another vehicle.
Yeah.
And I truly believe in that.
So what does growth mean to you?
Progress.
Okay. And how have you systematically seen yourself progressing? And do you think you've already gone there wherever you want to be, or do you think there's a lot to chase for you?
I don't really like chasing anything, honestly, but I really believe in, doing better, giving my best every single time.
Day.
Right? So when you wake up in the morning, you should feel excited about what you're doing. You should feel meaningful about what you're doing. If you're, sometimes stress happens. That's part and parcel of life. But every single day, if you're waking up in the morning thinking like, why the hell am I doing this? Then probably that's not the right approach.
But I think, do you think as humans, we all go through those bad days, right?
Yes.
We're all moody, and
Yes.
what you just said might seem very easy putting it into words, but doing it actually in real life is quite difficult. So what do you tell yourself when during bad days for you to get up and do that work?
More often than not, I cannot tell myself to get up and do the work. So I have made sure that I have the right kind of people around me
Okay.
who can keep me accountable, who can keep me grounded. And especially Ananya, my wife, she's always, we do something called as 6 things, where we share 6 good things about every single day. And on a bad day, we do it higher number, right? So whenever I'm going through these phases, right, she keeps me grounded. She reminds me what I'm doing, why I'm doing, and then she pushes me to do it, right? And that's how it is.
What are the top 3 things that's happened really well for you unexpectedly in this journey so far?
Number 1 on top of my head right now is, I've been constantly thinking about doing financial education to the masses. And last year, Kotak approached me to do their entire stock market curriculum in English. And I think that tops my list right on top of my head right now. The second thing that has happened really well is I have been able to pivot to different sides of business when I can identify the patterns which are going and not in the right direction.
Right.
For example, I started Clever Turtle because if you look at the entire 2,300 consultation calls, we have onboarded only 150 clients. The remaining people lacked, the base of the pyramid, that is their emergency funds, insurances, and mutual funds.
Yes.
So that gave me a blue ocean, saying that even though there are number of advisors and all of that, mutual funds are here on TV, still so many people are unaware and misguided of how to do it.
Yeah.
So then that is when Clever Turtle was born.
Okay.
So starting Clever Turtle was the second best thing. And the third best thing that has happened is my team. Trustworthy, and we don't feel like we are in a company. We feel like we're working together in a family. I know it is very cliched, but that's how we feel. Because people in my company have taken pay cuts when the business did not do well. They have helped me whenever I was not good. And at the same time, we have done the opposite as well. So we have been there for each other. And that's the best part about third best thing that I could say.
I think that is very important as a founder, right? When you're starting off the company, the first few employees that join you are extremely crucial for making or breaking your company.
Yeah.
And if they have stayed through those tough times in your company, they should have a strong why. Do you actually know why they stayed with you?
Most importantly, your why has to be very strong and something meaningful.
Yeah.
If that is not strong, then the team who's going to come to you, the reason why they come to you might be just money.
Right.
Or could be learning, or could be something else. Only when your why is relevant and they also resonate with it, that is when you're doing something bigger.
Right.
And I feel that whatever struggles I have gone through financially and in life, the team members I have today have also gone through something similar. Right? And they resonate with what I say.
Yeah.
So we're working on a bigger cause, and that's what makes us feel really happy when a family is getting financial clarity, because clarity gives confidence.
Right. So you're helping a lot of families build financial freedom, right? In your definition, what is financial freedom?
See, financial freedom actually has different levels.
Right.
The first level of financial freedom, I could say, is financial security. Let's say, for example, your monthly expenses is 50,000 rupees. And if this half of the 50,000 rupees is at least coming through passive income, then that's the first level, financial security.
Okay.
Right? And then we'll jump to the third level, that is financial independence.
Okay.
If your entire yearly expenses is coming through passive income, then that is financial independence. And then financial freedom, which is the ultimate level, is where, like people say, whatever you want to afford in life, you're able to afford. Like 2 or 3 big luxurious things. It could be charity, it could be your own private jet, or all of these things coming from your passive income. So that is financial freedom. So it's a data-driven thing.
Okay. But today, a lot of us are stuck, like you said, you're getting 4 lakhs per month, but most of your income is stuck in EMIs, right? Now, with our lifestyle, or a middle class person who's watching this, who wants to create passive income, it's quite difficult with the responsibilities he has on his shoulder. How do you think, and do you think they should start off with passive income, or what should they do?
See, passive income comes in different ways. The first way of passive income is most probably, FDs, right? You put in money, you get a certain,
bet.
safest bet, but not the most efficient, I would say, because after taxes it comes down to like 4%, so it is not even beating inflation, so you're losing money essentially. The second one could be, your rental income, but actually it's not really passive if you ask me when it comes to rental, because you're taking care of your tenants, maintenance, and all of those things, but still a passive income. The third one is something like an SWP, right? So where you're doing a systematic withdrawal planning from a corpus that you have built, right? For example, if you have built a 1 crore corpus over a period of time by investing, then you can withdraw almost 6% of your overall investment every single year.
Okay.
Right? So that's 6 lakhs, that's 50,000 a month. Now that's passive income. We expect the market to grow by 12%, and then this 6% is where you're withdrawing. So the corpus continues to grow, whereas you're still able to get a fixed income. The other way could be investing in startups, which is not really accessible to retailers, right? Because they wouldn't have so much money. So the best thing to do is, you cannot start with passive income. The best thing to do is build a corpus. How are you going to build a corpus? Start very, very small. Now, this is contradictory to what most people would want me to tell, but if you start very small, behavioral wise, it's an insignificant amount for you.
Right.
So you don't feel the pinch of it.
Correct.
And eventually when you start seeing those profits and a little bit here and there, then automatically you'll start putting in more money.
Your risk appetite is getting larger with confidence.
Yes. Right. So that way you start small, understand this game, and eventually once you're comfortable with it, automatically I've seen more people wanting to put more money here. Initially they're very hesitant because they're like, oh, something is going to be like taken away from me. But once they start very small and then they start seeing some profits, oh, my 15,000 rupees has become 17,000. And then they start, they're structurally, the way they think changes, because now they're like, now if they have to buy something, is it worth it here, or should I want it to grow? So then most people, kind of then start making decisions this way, and then money slowly starts moving into investments.
Right. That I think is pretty basic human psychology, right? When people start looking at profits, money, and a little bit of outcome from what they've done, then they invest into it.
Jo dikhta hai, wo bikta hai.
Correct. And I think it's also, it's not easy on your side also, right? When you initially are educating people, there will be subconsciously a little hesitation from their end as well. If you say, let's say you put 5K, I'm sure 5K is not a significant amount. You'll go through this, you'll get this. I'm sure a lot of people would have asked you a lot of negative questions. So how do you deal with those negative questions, and how do you actually change their mindset into investing the amount you want them to, because it benefits them?
So number one thing is, I don't recommend the amount for them to, they ask me like, what is the best amount of money that I should put to make good amount of money?
Yeah, that's a basic question.
The answer is always like more money. The more you put, the more you make, right?
Yeah.
So I tell them like, what is the most insignificant amount of money that even if you lose every single month, you wouldn't care?
Right.
And that's the amount that they start with, right? And to answer your question, like how do I deal with the difficult questions? I love answering difficult questions. My job is to prepare for those difficult questions, because it is also a good insight for myself, because even I invest in the markets, right? It's an insight for myself as well. So I ask myself difficult questions first in thinking. See, whenever you're investigating, right? You have to think like the thief.
Yeah.
Similarly here, I have to think like the investor. Since I am an investor, it's easier for me to think what they would ask, how they would feel, and when they would feel. So that makes it easier for me to handle these situations.
So in your experience, you've done like 2000 plus calls.
Yeah.
I'm sure you would have come across some crazy questions, crazy asks, right? Do you remember one thing out of those conversations, one crazy question that's still stuck in your head?
Yeah, so there's this guy who came up on the call, and there's so many, but this one on top of my head. So he comes on the call and he's like, he speaks everything well, very nice, and then I start asking difficult questions, which is what I do. So I start asking him like, what is the source of these funds? He's like, I want to invest 60 lakhs. Okay, I start asking him, okay, what is the source of these funds? He said, I've taken a couple of lakhs from a few people from the bank and all of that. I said, okay, interesting. So why are you not using your own funds, or why do you not have funds? What happened? Right? So then he did not expect me asking that question, and then he opened up and he said that, I am a working professional and I earn like 3 lakhs a month.
Okay.
And I saw that, in the stock market, you can make a lot of money. So then he put around 60 lakhs into the markets, and then he lost everything. And at this point of time, his emotional revenge situation is somewhere here, but his financial situation is somewhere here. So what he has done, he has taken loans from people, the same 60 lakhs, and he started trading again. And he lost that too.
Wow.
And now he's come to a call here to see, okay, most people think there's a holy grail for where you're going to make a lot of money. And he came to this call and said, I want to take this loan again. And I know I'm almost there. I know I can make it. Right? So these are some of the crazy calls that I have to handle. The first thing I made him do is, stop trading and actually delete his trading account. Okay. We did not enroll him, but that's the first thing we got him to do.
Sounded like a gamble.
It's mostly a gamble.
Yeah.
And not the right influence with people around or from social media.
What ran in your mind when you heard that?
Like, people are crazy. I mean, what are they even thinking?
Yeah.
So their idea is like, I'm going to recover that entire 60 lakhs with 60 lakhs. Or in the first place, why would you put your entire 60 lakhs in one place where you're not sure? It's just a gamble.
A lot of people are scared of risk. This guy was obsessed with risk, right? Recklessly. I mean...
He was not obsessed with risk. He was obsessed with greed.
Yeah, you can put it that way. Yes. But are you obsessed with risk?
I'm not obsessed with risk. I mean, I like things that can exhilarate me and kind of give me that josh, that fight, that challenge, right? What is risk according to you?
I think anything that you're putting yourself into where you're not sure of the outcome yet, right? You have not done that before, so you don't know what's going to happen.
You never know what's going to happen in life. There is no guarantees.
Yeah.
I don't know what's going to happen in the next half an hour in my life.
Yeah.
For all you know, right? So risk comes from doing what you don't know about.
Yeah.
Simple example would be, you're an absolute beginner who has never touched water, and now you're just falling in the swimming pool thinking that you're going to get gold at the bottom of it. Are you going to live? No, you're going to die. Is that risk? Absolutely. Should you take it? No.
Yeah. For a lot of people, risk is emotional. Sometimes risk is mathematical, risk is philosophical. What is it for you?
See, I learned this from Tony Robbins.
Okay.
That in the earlier days, humans used to live in the forests. So if a tiger came in front, it's flight or fight.
Yeah.
Correct? So that is how the brain has
evolved.
Right? But in today's terms, if you lose money, it is the same situation as coming in front of a tiger.
Yeah.
Your brain is in flight or fight mode.
Yeah.
Okay. So if you ask me about risk, learning about how to handle that is what is risk for me.
You have also included AI into your business, right? Do you think AI is going to fix the human bias, or is it going to amplify it?
It depends on how you use it. I mean, AI can be trained. AI is something that humans have built, right? You can make it to be biased towards a specific side, or you can make it unbiased, right? If you train it enough, then it will tell you whatever you want it to. Correct. So in that way, I would say that in my business, at least, we have used it in a very efficient manner to do research, to identify the worst case scenarios for portfolios. So we use a lot of AI in this area. So that has worked out really well for us. But how it's going to pan out in different industries for different people, it's totally, on a specific case to case basis.
Are there any AI tools that you suggest for people to use to understand trading?
Not really. Because the reason being, AI can tell you, okay, this strategy is best, okay, this can give you this much returns and all of that. But it ultimately comes down to execution.
Correct.
Today, there is no lack of information.
Yeah.
So if AI can change your behavior, then definitely yes. But unfortunately, we don't have any behavioral trading tools in AI that can help people change their behavior right now. So all we have is a lot of information, and AI is only going to give you information, and that's not going to increase your efficiency or the outcome.
Okay.
Because like I said, 80% is psychological and 20% is strategy.
Yeah. So that's what's very different about you, right? You are somebody who goes by the saying that most of the financial mistakes that happen from a retail trader is not strategy, it's their psychology. Could you explain why and go a little deeper into that with examples if you have?
Yeah. So let's start with a person A who does not have, any kind of savings or investments. Now this person has 50,000 rupees in hand, and now in his mind, he's like, I'm going to make this into 1.5 lakhs.
Yeah.
But the moment 50,000 becomes 48,000, he starts thinking, I could have bought something for my wife with that 2,000. I could have filled my fuel tank 4 times for my two-wheeler with that money. So that's where the change happens, right? So the more he loses, he's like, okay, I should recover this as soon as possible. Now that 48,000 becomes 45 and then 40 and then eventually 0. Okay. And then he is psychologically not in a place to make decisions objectively.
Right.
Okay. So that's the first case. Now the second case of people is where, they have the money, they have the savings, they have everything, and now they have to get into trading. Okay. Now, if they learn about it and do it, and if they're okay to take drawbacks, then they will do well. But if they don't work on their behavior, see, again, Tony Robbins, he says, money does not change you. If you are somebody who is very cunning, when you have more money, you become more cunning.
Yeah.
So money only magnifies who you really are.
Yeah.
Right. So as a person, if you're a person who does not like risk and who does not like, anxiety or cannot take uncertainty, then irrespective of what your financial pyramid is and how it is, it will become extremely difficult for you to trade, because trading is not for everybody. It has to suit a specific nature of people.
So what you're saying is, this is what I also believe in, right? Self-awareness is actually a strategy. It's not just a philosophy. If you know yourself better, a lot of things around you can amplify in a way that's going to benefit you that you wouldn't even have expected. And trading is actually one of them. You should understand why you're trading, why you're putting money into certain things. And I think I'm very fascinated about that concept of why, which is why I'm here today with you. And do you also suggest your customers to actually understand the personality before trading, or is that something that you help them with?
Yeah. So during the consultation call itself, we try to figure out why are they even trading.
Yeah.
Okay. And we try to gauge their personality beforehand and let them know that maybe it's not the right thing for them. For example, if you are an actor, Okay. Since, standing in front of these lights and cameras the whole day, you wouldn't have the energy to even think about the markets or anything else for that matter after your day. Right? So maybe if you want to do trading where you're involved every single day, maybe it's not the right thing for you. Right? So we give them that objective reasoning. Right? And beyond that, if they want to really learn and do it, it is their choice. And
What
then
do
we
you
try
think
to
is
help
the
them.
right thing for such professions then?
They should passively invest. I mean, reach out to an advisor or mutual fund distributor, tell them your goals, and then help them invest so that they can take care of it for you. Just like if you break a bone, you're not going to sit and put, all the treatment, right? So you go to a doctor. So
you go to the
similarly
expert.
here, just go to the expert, give your money to the professional, let him take care of it.
So do this only if you have enough time, patience, and knowledge.
Trading is another profession.
Yeah.
It's like asking, can you become a basketball player along with cricketer?
Yeah.
You can be, but how many people are like that? Maybe not. Right? So you can be an all-rounder playing all the games, but probably you cannot represent your country in both the games, right?
Yeah. Jack of all trades. It's very difficult to do that, especially in trading, right? And in the Indian economy that I'm seeing today, there are a lot of Instagram influencers who are actually helping you say that go to ChatGPT, go to Claude, put XX prompt, and it's going to give you a great financial strategy. Do you think that is actually true, legit? Because a lot of people are getting diverted with that and losing out a lot of money. What do you suggest people who are doing that?
They need to understand first what is a ChatGPT or an LLM and what kind of information it has access to. It does not have access to your personal information. It does not have access to your mindset. It does not have access to your parents' mindset, how your family is going to react, how your wife is going to react to anything
It has no
they
context
decide.
of
It does
your
not
life
have
at all.
context of your life or what experiences you have been through. There might be a very great investment. Okay, it can give you fixed returns and all of that, but possibly it's not the right thing for you.
Yeah.
Okay, so in that situation, you need to know that AI cannot solve everything at this point. You can give context, but you also have your own human errors that you're going to make. So even if you miss out on one crucial point, then it can give you a totally different outcome. So which means it's not really the right thing to go about.
Right. So what
Use it as a tool.
Yeah.
Don't use it as the sole decision maker.
Yeah, I think a lot of people are reliant on that these days, which is a very scary journey that we are all in. AI is just a thinking tool. It is not your execution partner.
Yeah, it should be a very great brainstorming partner.
Correct.
You can put all your ideas, ask how it can evaluate and all of that. And then when you have like 5 different ideas, kind of ask it to compare the 5 different ideas and all of that. But again, don't take the decision that it gives. You have to come to that conclusion.
Right. So this is all about you professionally, right? There's obviously a personal side to you where you're into a lot of other sports, like you love scuba diving, you love skydiving, you're into a lot of adventure sports, right? And somewhere in the conversation earlier, I also understand you were linking that to risk management. Like adventure sports is also a calculated risk that you take in your life. How do you relate to that? What is your psychology behind that?
Like I said, how you do anything is how you do everything, right? So you wouldn't want to go and do bungee jumping without the rope tied to you.
Yeah.
And you wouldn't want to probably do it where there's no certifications and probably not in India. Right?
Yeah.
But if you want to do it where it's very professionally done and that experience that you have. Even today, I can remember the feeling that I had just before I jumped. And after I jumped as well.
Right.
And that happened probably 10 years ago, right? So life is all about creating those moments that you can remember, recall, and think about it and have fun, right? So that is the kind of thing that I would want to do even in my professional life, where I am taking risks, but it is calculated. And similarly, even in adventures. That makes me feel alive.
I can see your face lit up saying that. But do you think risk is something that you learned or it's wired in a personality?
Interesting question. I think it is wired to a large extent depending on how your childhood was, who your parents are, and how they've done things. But at the same time, it could be something that you can rewire and build yourself up as well.
So, like you were saying, you were also making decisions objectively, but sometimes over and above data, over and above your pros and cons, you would have made a decision just based on your gut, right? Is there an example of that circumstance in your life so far?
So many. See, intuition, there are two types, I believe, right? There's one kind of intuition where with practice, your intuition becomes better and better.
Right.
For example, badminton. Initially, if you just stand there and you're like, based on my intuition, I'm going to hit the shuttle, it's not going to work. But eventually with practice, you don't even have to think within a split second.
It's voluntary.
You're like, it's involuntary. It happens automatically, right? Even car driving. You don't even logically think or consciously think that you have to put a brake, but like, tuck. Right? And when it comes to trading, similarly, should you go for this trade or not? Finally, there is always uncertainty.
Correct.
So are you willing to take that risk and reward or not? Right? So then you go with that gut instinct. But during the starting phases where you don't know anything about trading, some people are putting money like, I think this is going to go up. The moment you say think, you're not objective anymore. Right? So try to train yourself to be as objective as possible. But otherwise, once you have enough practice, your intuition will support you. And I believe in my intuition more than anything else.
Since you're an optimist, I'm sure along the way there were decisions that you made which was actually scary, but you still went ahead with it. Is there a decision like that you can recall today?
Yeah, resigning from Bosch.
Okay.
Because when you have that constant checks coming in
Every month,
you know that for sure that this much amount of money is coming to you. And you want to be independent. And the moment you resign, you know that there is no guaranteed money coming in life. And another mentor of mine said, anything that is guaranteed has a guaranteed loss. For example, if you're getting a guaranteed 7% income, then you're guaranteed that you're not going to get anything above that. Right? So in another place, if you're getting whatever 12%, for example, mutual funds, then you're not getting that because you're getting a guaranteed 7%. So there's a guaranteed loss of 5% there. Right? So similarly here, I took that leap and I think that was one of the scariest decisions so far.
But also one of the best decisions for you.
Yes, absolutely.
So you have bootstrapped your business alone, and there's a lot of there's a lot of sides that not people have seen so far, right? What is the loneliest part of your journey so far that people don't see?
The loneliest part of your journey is mostly when you're not doing well. Okay, so if you do extremely well also, you kind of become lonely because everybody look at you in a different light and they feel like he's above our leagues at this point.
It's always lonely at the top.
Yeah, and it's lonely at the bottom as well. Because there are battles you're going to have in your own brain. People might be there to support you, your wife, your parents, your family, all of that is great, amazing. But when you're sitting on your chair and you know that whatever you planned is not working anymore, you are doubting, questioning your very being. So that's one place where you're going to feel extremely lonely. But again, the only thing that can help you come out of it is the why you started. So if you're starting something, you better have a good why.
So what is your why?
When I started off, honestly, I did not have something very solid. The only thing was very clear. I am not going to be in a corporate job. And if I have to not be in a corporate job and still earn good amount of money, then I have to go into a different field and I have to be the best at it, best at what I do. So that's how I started off. But when I went through a downfall after I started this, that did not help anymore. I was like, I might as well get an income.
Yeah.
Right? But I was still not okay with that. That's when I had to dig into my childhood. I have to dig into everything that happened in my life. And looking into that, if you see, my great-grandfather, super wealthy. Grandfather, kind of. But down the generations, they have lost hell lot of money.
Yeah.
Why am I in this situation in the first place is the question I asked myself. And it's not just me, it is the system. Right? So, of course, I have made decisions that could have led me here. All of that is fine. But along with that, it was the lack of financial education. Where was money leaking in the family? High debts.
Yeah.
Okay. NPAs, like you have given money, people are not repaying you back.
Yeah.
So many places, right? Money has leaked left, right, and center. You're putting money where you're taking loans and you're putting that money to do a function probably or do an event in your house, which is never going to repay you back.
Yeah.
So if you put in a lot of money like that, then you're never going to come out of it, right? So then my why became like, first I have to become financially independent. I have to become financially free. And then I'm going to learn about the markets. I'm going to learn about this personal finance, and then I'm going to help other people do it. And until you do that, you get the first sign of success.
Yeah.
You're still doubting all of that.
Correct.
And when I started teaching trading and when I got that first testimonial saying that this has built immense confidence for me, that is what was needed.
So what is one thing somebody wish had told you when you're starting your journey?
To be extremely cautious about how I make decisions, about hiring people, firing people, about how much to spend, for what should be your runway, what should be the emergency funds that you keep. I did not know what is an emergency fund when I started a business.
Right.
I know I am making 10 rupees. I'm spending 8. I have 2 rupees. I spend that 2 rupees.
Yeah.
That's how I ran my business to start with. And then when things went bad, I did not have anything to, hold on to.
Right.
So then I had to reach out to my friends, my family, and they were there to help me out. So I'm really grateful for them.
Right. So in this journey, there is something that would have revealed about yourself to you. And what would that be?
That I don't give up.
Right. You're very resilient.
Yeah.
And you didn't actually know that side of you existed before this?
I had 100 chances to go back to a corporate company when things did not work out. But I did not give up.
Because you had a strong why.
Yeah.
Right. So what is one thing people watching today can learn from you and your journey?
Make mistakes. Making mistakes is a very, very crucial part of doing anything or learning anything or becoming good at what you do. But don't make such big mistakes that it's going to wipe you out. Whether it's trading or whether it's business. Take risks, but if that doesn't go your way, you should still be okay with it.
Yeah.
So don't go only that first step, go to that second step and think, if this goes wrong, where am I going to be tomorrow? And if you're okay with that, then only take that risk. So make mistakes.
What are your principles which are non-negotiable for you in your life today?
Being in the financial industry, being transparent, absolutely transparent about what the risk is involved, it is what it is. So being transparent and integrity, honesty. So integrity is doing, what you say. So if you're going to say you're going to call at 6 p.m., make sure you call at 6 p.m. If you're going to say you're going to be at that meeting, be at that meeting. If you're going to say you're going to help them, help them. It's very simple. Again, most people don't.
Right.
But I think today I have survived in the financial industry. I have built trust and people trust me because I have been honest with them even when things were not right. I have been honest with them when things were right. And I have been with integrity. So I've apologized if I made mistakes.
Accountability.
So, accountability, basically. Right. And then only you can sleep peacefully. And I love sleeping. So I've been very peaceful in my sleep and only because I've been upfront about whatever has happened every single time.
So discipline and consistency is very, very important in a journey like this. right? How do you view what is discipline and consistency for you, and how do you deal with that?
Today, when you look at consistency, for me, it comes, for me, talking to people is something that I love. Networking with people is something that I love. And with that, the obsession that I have built to help people out with their finances helps me stay consistent. So wherever I go, for example, I was coming back from Delhi to Bangalore, and on the way to the airport, I was speaking to my cab driver. The cab driver, we were speaking, having a normal conversation, and then I asked him, like, how do you manage your finances? He said, I don't believe even the banks. I don't put my money even in an FD. I don't put money anywhere. I keep it in the trunk in my house.
Wow.
And I spoke to him about what is all of personal finance, how it should be managed. And 1 month back, after 14 months after that conversation, he was constantly looking at my WhatsApp stories and all of that.
Okay.
And 1 month back, he called me saying that, "Sab, मैंने investing चालू किया है."
Wow.
Right? So consistency is all about, you have to get obsessed with it. If you are not obsessed with it, consistency is really difficult.
Yeah.
Okay. So, and at the same time, discipline is important. And if you start doing it with small things, it is going to happen with the big things as well. So obsession
Starts
is
with
the
your
solution.
micro habits.
Yes, obsession is the solution, I would say. Become extremely obsessed with what you want to do. Be consistent with.
Right. So what should Pranav stand for? Like, what should you be known for? Stripping away you as a founder and etc., you as a person, what do you think people should recognize you for?
I think honestly, if I have helped them get more clarity about their finances, or clarity about their life, or help them in any way, I'd be very happy.
Let's say, what is the mindset they should even start with?
Mindset. That's an interesting question. So when it comes to mindset, I think being an optimist is by default a necessity for you to be successful in what you do. But at the same time, have a person who is a pessimist around you, so that they're going to put across the worst case scenarios across to you, and they're going to make sure that you're analyzing both the areas. Not exactly a pessimist, but somebody who can always, stay accountable to what you're doing.
I think this conversation so far has been very interesting with you, and I am very keen on understanding more. I think I'll talk to you after the podcast as well. But so far, how did you feel this entire conversation with me?
I think it was an interesting introspective conversation, because I did not know what you're going to ask me, and what I'm going to answer is going to be more or less what I've believed in so far. So I think I've been, again, honest and transparent about what I feel, and I've shared it with you, and hopefully it's going to help the viewers as well. So yeah, just don't give up in what you're doing. You're doing something great. So the message of founders has to go out there.
And that's a wrap on another episode of Why with AR today. If there's one thing we all can learn from this conversation with Pranav, is that risk, whether in market or life, is not something that you need to fear, but to manage and understand. And Pranav lives that truth every single day today. If this conversation added value to you, please share it with somebody who is starting off in trading or entrepreneurship, or just looking for that next big leap. Please subscribe to Why with AR, leave a review, and I will see you on the next one. Stay tuned.